Hello everyone, welcome to my channel, and today I'm going to be discussing the 7 biggest investor mistakes beginners make. So if you're just starting out investing, the chances are you're about to make at least one of these 7 costly mistakes. Stick around and I'll show you exactly how to dodge them like a pro. If you're new to the channel, I am John, and on this channel I am documenting my investment journey, and I'm trying to generate lessons for everyone else to learn from, whilst I learn, in the hope that it benefits some people. So if you're serious about building your wealth and your portfolio, make sure to hit that like button and subscribe for new videos every week. So let's jump straight into the mistakes that beginners usually make. People like to chase hot stocks. So everyone wants to find the next Tesla or the next Apple, but chasing hype usually ends in regret, whether this is through penny stocks or buying stocks that are overvalued because there's already too much hype in them. So don't get sucked into hot stocks. Build a long-term plan and stick to it. When you're buying a stock, you should have a value that you're willing to buy it at based on your analysis, and you shouldn't really be going above your plan. Stick to the plan, because that is when you minimize any risk of losing money. Mistake number 2 is trying to time the market. Even pros can't predict the market, so trying to buy the dip perfectly will not work out, most likely. You don't need to focus on getting the right time. Focus on time in the market, not timing the market. Mistake number 3 is a very common mistake that I see with new investors, and that is investor money you can't afford to lose. You should not be investing in the market with money that you can't afford to lose, because it makes you more emotional and then your actions become more rash, which leads to the chance of you losing money quickly and a lot of it. So if it's your rent money, it's not investment money. Always build an emergency fund before you start investing. Any money that you're putting into stocks, you should be prepared to lose, because you are not guaranteed returns. Mistake number 4 from beginners is a lack of diversification. So putting all your money into one stock can be quite risky. So spread it out. Think ETFs, index funds, different sectors. So a lot of people will have an ETF that makes up a bigger portion of the portfolio, and then individual stocks that they like, that they see more growth from. Some people might not have ETFs and might just spread it out across a nice range of different sectors, and some people might only do ETFs because they think that that spreads the risk enough. But yeah, don't just focus on one stock. If you don't have a lot of money to invest, my suggestion would be an ETF and a couple of individual stocks. But if you've got more money to invest, I think you have more money to push into more stocks, as long as you can track them. We're over halfway through the video now, so don't forget to click that subscribe button. Mistake number 5 from beginner investors is letting emotions control decisions. So at the time of recording, we're in the middle of Trump's tariff wars, and I am seeing this on the daily. Markets can be quite volatile. They'll crash, they'll rally, and if you sell out of fear, you're most definitely locking in a loss. Remember, your emotions are terrible investors. You need to learn to be emotionless when it comes to investing. Now that sounds a bit robotic, but it's the truth. If you can take emotions out of your investing and only look at the data and the figures, you're more than likely going to make a better choice, which ends in better results. So take them emotions, lock them away, and prepare to be a robot when you're looking at your investments. Mistake number 6, ignoring fees and taxes. So a lot of your transactions will have fees on, whether you're in the UK and that's stamp duty, whether you're paying tax on your dividends, when you're paying tax if you're in an investment account and not an ISA, they all need to come into account. ETFs normally have a management fee, so that small fee of 1% could actually cost you hundreds of thousands over 30 years, depending on how much you're investing. So you need to know what you're paying and minimize it. I think there's some funds out there that have a 0.09% management fee, and then there's, as I've said before, some funds that might have a 1% management fee. They might have the exact same stocks. You obviously want to go for the lower fee fund. So when you're looking at funds, Look out for the management fee. When you're investing in your stocks, if you can, put them in an ISA or a Roth IRA, I think it is in America, where you get a tax-free allowance, and make sure you're aware of any taxes you may have to pay on your dividends. And the final mistake that we're going to run over is not having a clear goal. Investing without a goal is like driving without a destination. How are you ever going to know when you got there? So, are you investing for retirement? Are you investing for a house? Are you investing for financial freedom? Get clear, make a plan, and make sure that plan is tailored towards your goal. Otherwise, you're never going to know when you've hit it, and you're never going to know what your next step is. You always need to be prepared for your next step. So, get that goal in line. So, a quick recap of the 7 mistakes that beginners make. Avoid chasing hype. Don't time the market. Protect your essentials. Diversify. Control your emotions. Watch fees. And always have a goal. Finally, my question to you is, which mistake do you think is the hardest to avoid? Let me know in the comments. Personally, I would say investing without emotion can be the hardest if you find it hard to switch off that emotion. But if you're investing with money you're prepared to lose and you've got a clear plan, emotions should be minimized. When it's times like this, with the market crash that's happening and the Trump tariff wars, I can see why emotions will creep in. But you just got to outline your plan, stick to that plan. Emotions don't matter. If you found this helpful, smash that like button, share this video with a friend who's just starting their investing journey, or if you want to get them to start investing and to avoid any mistakes you might have made. Subscribe for more investing videos and to see how my journey goes, and I'll see you in the next video.